You ever feel like you're missing out on something? Like you're scrolling through Instagram and there's that one guy who started trading last month and now he's flexing a Rolex and saying stuff like, "You're losing money by saving it." And then on the other side, there's that chill finance nerd who's like, "Just invest in index funds, let compounding do its magic, and you'll be rich when you're 65. Like, wait, what's the actual path to wealth here? Is it the fast, high-risk trading game or the slow, steady power of compounding? I've wrestled with this question myself. I even tried a little day trading once, lost $85 in like an hour and realized I had no idea what I was doing. But that little loss taught me something most people only realize after they've blown way more. So in this video, we're breaking it all down. Compounding versus trading. Which one actually builds real, lasting wealth? Let's dive in. The nature of compounding, the silent power. Let me tell you something most people overlook. Wealth doesn't always come from hustle. Sometimes it comes from patience. Boring, quiet patience. A friend of mine once told me his grandpa invested just $1,000 into a plain old dividend-paying stock back in the 1970s. He never touched it. No trading, no fancy strategy, just parked the money and left it alone. Decades later, that $1,000 had turned into over $500,000, just sitting there, growing. Slowly at first, then like wildfire. That's the magic of compounding. It's not about doing more. It's about letting time and consistency do the heavy lifting. At its core, compounding is simple. Your money earns returns, and then those returns start earning returns too. It's like planting a tree and watching it grow. For years, it's just a sapling, and then one day, it's this huge tree full of fruit. You don't need to check it every hour, you just water it and give it time. But here's the kicker. In the beginning, compounding feels like it's not working. You invest $1,000, a year later, it's $1,070, maybe $1,100. You think, that's it? And yeah, in the short term, it's unimpressive. But if you stay the course, keep reinvesting your returns, and don't panic, something wild happens. The curve bends. It goes from a slow crawl to a sprint. Suddenly, your money is multiplying in ways that feel unreal, and you barely lifted a finger. That's why people like Warren Buffett swear by it, not because it's glamorous, but because it works. The secret sauce isn't high returns, it's consistent returns over a long time. You don't need to pick the next Apple stock. You just need to start early, stay steady, and let the snowball roll. And honestly, that's the most peaceful way to build wealth. No stress, no screens flashing red, no emotional roller coaster, just slow, silent growth. The kind that sneaks up on you and changes your life. The nature of trading. The fast game with hidden costs. Now, let's flip the story. Because trading, man, it's a completely different animal. And I get why it's tempting. It feels exciting. There's this rush when you see a chart moving in your favor. It's like playing chess with money. You think, if I just buy here and sell there, boom, I double my cash. And hey, sometimes that does happen. You win one trade, make a quick profit, and suddenly feel like a financial wizard. But here's the truth no one brags about on Instagram. That same fast win, it can turn into a brutal loss just as easily. I remember when I first tried trading, I thought I was smart. Watched a few YouTube videos, followed a couple of Twitter gurus, and jumped in. Within the first hour, I was down $85. Just like that. Not thousands, but enough to sting and make me realize, oh wait, this is way harder than it looks. That's the thing with trading. It's not just you versus the market. It's you versus full-time professionals, AI algorithms, hedge funds with infinite data, and people who do this for a living. And even they lose money sometimes. Trading isn't about knowledge alone. It's about psychology, timing, emotional control, and lightning-fast execution. And if you're not constantly learning, adapting, and staying glued to your screen, you're playing a game you probably can't win long-term. Plus, there are all these hidden costs that slowly eat away at your gains. taxes hit harder with short-term trades because you pay income tax, not the lower long-term capital gains rate. Then there are platform fees, spreads, slippage, and let's not forget the emotional toll. You win a trade, feels amazing. You lose, suddenly you're spiraling, doubting yourself, and trying to make it back, which often leads to even worse decisions. Yes, a few people hit it big. Some get lucky. Some are genuinely skilled. But most traders, they either break even or lose money over time. There's even research that says nearly 80% of day traders end up losing. And even if you win one day, you've got to wake up tomorrow and do it again and again. It's not a path to freedom. It becomes another job, one that's stressful, time-consuming, and often soul-draining. So while compounding builds wealth in the background like a slow-cooking stew, trading is more like frying bacon on high heat. It sizzles, pops, and smells great until it burns. Emotional discipline, the invisible decider. Let's talk emotions, because whether you're compounding or trading, your mindset can either build your wealth or quietly destroy it. But here's the thing. These two strategies test your discipline in very different ways. With compounding, the biggest temptation is to do something. Seriously, it's boring, like really boring. You invest in something steady like an index fund, and then what? You wait, and wait, and wait. You check your portfolio after a year, and it's only up a few percent. You start second-guessing. Maybe I should pull out and try something else. Maybe I'm doing this wrong. But this is where emotional discipline comes in. Compounding rewards people who can delay gratification. It tests your patience. Can you keep investing even when the market dips? Can you ignore the noise when everyone's panicking? The ones who win are the ones who stay steady through all of it. Not because they're geniuses, but because they're consistent. Now, compare that to trading. Trading requires a different kind of emotional control. It's high-speed, high-stakes decision-making, and the emotional swings can be intense. One minute you feel like a god because your trade hit, the next you're questioning your entire existence because you misread a chart. It's addicting, honestly, like gambling, and that's dangerous. Most traders don't lose money because their strategy was bad. They lose because they let emotions take over. Fear, greed, FOMO, revenge trading. It's a mental minefield. You need rock-solid discipline to stick to your plan, cut losses, take profits, and walk away. And the crazy part is, even pros mess this up. That's how brutal the emotional game is. So while compounding tests your ability to do nothing, trading tests your ability to stay sharp and emotional neutral under pressure. Both are hard, but only one lets you sleep peacefully at night without sweating every tick of the market.
Risk and reward, the truth behind the numbers. Now let's talk about the elephant in the room. Risk. Everyone knows trading can make you rich fast. That's the dream, right? Turn $1,000 into $10,000 in a week. And yeah, it's possible, but it's like striking lightning. For every one person who makes it big, there are hundreds, maybe thousands who lose everything. Trading is the classic high-risk, high-reward game. The problem is, most people only hear about the reward. No one's posting their $3,000 loss on Twitter. They post the one lucky win and hide the rest. The risk with trading is both visible and hidden. Sure, you can see when your trade is in the red, but what you don't always see are the long-term opportunity costs. The time you spent glued to screens, the mental energy you burned, the money you could have made if you just parked it in something safer and let it grow. Compounding, on the other hand, is low risk if you play the long game. Investing in diversified index funds or solid long-term assets rarely leads to total loss, unless you panic and sell at the worst time. The reward isn't fast, but it's far more predictable. And here's the twist. The longer you stay invested, the lower your risk gets. That's not true with trading. The more you trade, the more opportunities you give yourself to mess up. Overtrading is a silent killer. Also, let's not forget black swan events, market crashes, sudden global events, volatility spikes. A long-term investor might ride those out. A trader? could get wiped out in a day. The bottom line is, compounding minimizes risk while maximizing time, and trading maximizes adrenaline while exposing you to massive swings. Both involve risk, but one gives you a parachute. The other just hands you a wingsuit and says, good luck. Time commitment. Passive versus active hustle. Here's something most people don't consider until they're neck deep in it. How much time does this actually take? Because let's be honest, time is money. And when you look at compounding versus trading through that lens, the difference is massive. With compounding, once you've made a smart decision, chosen your index funds, ETFs, or dividend stocks, you can basically set it and forget it. You might check in once a quarter, maybe rebalance once a year, and that's it. It's almost like putting your money on autopilot. It quietly works in the background while you live your life. You go to work, build your business, spend time with family, and your investments just keep growing. There's a beautiful freedom in that. You're not glued to your phone watching charts tick up and down. You're not reacting to news headlines every morning. You're just letting time and math do their thing. Compounding doesn't ask for your hours. It asks for your patience. Now, trading, whole different story. It's a full-on job. Actually, scratch that. It's worse than a job. At least with a job, you get time off. With trading, the market is always moving, and if you blink at the wrong time, you can lose thousands. You have to watch price action, study patterns, manage risk, track indicators, keep up with news, and constantly update your strategy. It's relentless. And the deeper you go, the more it consumes you. Even when you're not trading, you're thinking about trading. Your mind's running back tests while you're trying to eat dinner. Your screen time shoots up. Your sleep quality goes down. Some people thrive in that high-intensity environment. They love it. But for most people, it becomes exhausting. So if your goal is to build wealth and have a life, compounding wins here. It's the chill, long-distance runner. Trading is the guy sprinting until he collapses. Skill level. Who can actually win? Now let's talk about who these strategies are really for. Because let's be honest, everyone wants to win, but not everyone plays the same game. With compounding, the barrier to entry is super low. You don't need a finance degree, you don't need to read 10 charts a day, you don't even need to be good at math. You just need to understand a few core principles. Invest regularly, reinvest your returns, and don't panic when the market dips. That's it. You can literally automate the whole thing and still build wealth over time. It's accessible. That's what makes it powerful. Anyone, a college student, a school teacher, a small business owner can do this. And the crazy part is, many do, quietly, without any flashy posts or crypto hype. They just consistently put money into the market, let compounding work, and 20 years later, they're financially free. No secret hacks, no advanced tools, no sleepless nights. Trading, though, that's a skill game. And not just any skill, it's a high-performance skill. You have to understand technical analysis, market psychology, macroeconomic indicators, and more. It's like trying to be a Formula One driver. Sure, anyone can drive, but not everyone can win a race. And to get good, you need to practice. A lot. Years of trial and error, years of losses, and constant learning. Most beginners underestimate how complex trading really is. They think watching a few YouTube videos is enough. But when real money's on the line, your brain reacts differently. You start doubting yourself. You hesitate. You overtrade. You blow up your account. It's not because you're dumb, it's because you're human. Trading punishes inexperience hard. So when we ask, who can succeed at this? The answer is pretty clear. Compounding is for everyone, but trading is for the few who treat it like a serious craft. Predictability. Can you actually count on it? Let's be real. When it comes to your future, you don't just want big results. You want reliable results. You want to know that if you follow a path, you'll actually get somewhere. That's where compounding shines. It's not a gamble. It's a system. When you consistently invest in the market, Especially in something like an index fund, you're betting on something that's been tested for over a century. Is it always up? No. But historically, over any 20-year period, the stock market has never delivered a negative return. That's wild. That means if you stay the course and don't panic sell during downturns, you're almost guaranteed to come out ahead. It's not about luck. It's about math, probability, time, and a little faith in the world continuing to grow. You can plug it into a calculator and see what $500 a month turns into over 20 or 30 years, and the estimate is surprisingly accurate. That predictability gives you confidence. It gives you a plan. And when life gets crazy, you don't need to freak out about your investments. You trust the process. Now let's talk trading. Can you make money with it? Yeah. But can you predict it? Not really. One week you might crush it. Everything is going your way, market is moving how you expected. The next week, total chaos. Earnings miss, news event, Fed announcement, something random from across the world, and boom, you're down 30%. Even the best traders can't guarantee consistent wins. That's why they manage risk like maniacs. That's why they use stop losses, hedges, and strict money management rules. Because they know that one bad trade can wipe out weeks of progress. The average person, though, doesn't think like that. They see a few wins and think they've cracked the code. And then the market reminds them that it's the boss, not them. So when it comes to predictability, compounding is like planting seeds in good soil. Trading is like trying to catch butterflies in a storm. Sure, you might catch one, but good luck making that your long-term strategy.
Wealth that lasts. Temporary high versus permanent freedom. All right, here's the heart of it all. Not just making money, but keeping it. Because let's be honest, getting rich is one thing. Staying rich, that's a whole different game. Compounding is built for the long haul. The money you grow through this method becomes sticky. It's rooted in fundamentals, in ownership, real assets that produce value. Your index funds grow because the world grows. Your dividends come from real businesses earning real profits. There's a natural stability to it. It's like building a brick house over time, slow but solid. When storms hit, market crashes, inflation, economic dips, your wealth doesn't disappear overnight. It might shake, but it stands. And the best part? It's passive. You don't have to work forever to keep making it. Compounding becomes this quiet engine in the background of your life, giving you freedom. Not just money, peace. That's true wealth. Now, contrast that with trading. Even if you do make a lot of money from it, it's often short-term. You constantly have to show up, make decisions, and take risks. The income isn't passive, it's active. You stop trading, you stop earning. There's no autopilot, there's no sleep mode. And here's something most people don't consider. The more money you make from trading, the harder it becomes to protect it. Because now the stakes are higher. You're risking tens of thousands per trade instead of hundreds. The pressure increases, the fall becomes steeper. And suddenly you're not just trying to win, you're trying not to lose what you've already built. So, while trading might make you rich quickly, it doesn't always make you wealthy in the true sense, where money brings security, freedom, and peace of mind. Compounding, though, that's the wealth you pass down, the kind that lasts. Okay, so after all this, what's the answer? Compounding or trading? Look, I won't sit here and say trading never works. Some people really do master it. They study for years, treat it like a full-time profession, manage risk obsessively, and they make serious money. But for most of us, trading becomes a game of stress, chasing, and emotional burnout. You might win a few rounds, but to keep winning, you have to keep playing. And that's exhausting. It's like running on a treadmill where the speed keeps increasing. One wrong step, and you're wiped out. Compounding, on the other hand, doesn't demand perfection. It rewards consistency. You don't have to guess right every day, you just have to show up over time. It's not sexy, It's not going to impress your friends at a party, but it works quietly, powerfully, predictably. And here's the thing. The real flex isn't making fast money. It's freedom. It's waking up one day and realizing your investments are earning more than your job. It's knowing your future is funded without the stress. That's wealth. Not just numbers in a trading account, but peace, stability, and options. So, if you're someone who wants to build wealth without turning it into a second job, if you want something you can rely on through good times and bad, then compounding isn't just the better option. It's the smarter, calmer, sustainable path. Because in the end, the goal isn't just to get rich, it's to stay rich and live well while doing it. If this video gave you some clarity, or maybe even saved you from jumping into something risky, do me a favor, hit that like button so more people can find it. And I'd genuinely love to hear your thoughts in the comments. Are you team compounding, team trading, or maybe somewhere in between? Let's have that conversation down there. I read every single one. And if you want more content like this, simple, honest, no BS breakdowns about money, wealth, and how to actually build a better financial life, subscribe to the channel. And hey, if you've got a friend who's obsessing over day trading right now, maybe send this their way. Might save them a lot of stress and a lot of money. Thanks for hanging out with me. I'll catch you in the next one.